This is Business Week Armenia, CivilNet's weekly economic digest. Here's what's making headlines in Armenia this week. Armenia's monetary authorities have greenlit the sale of HSBC's local subsidiary to the country's biggest bank, putting an end to the London-based financial giant's nearly three-decade presence in Armenia. The central bank confirmed its preliminary approval to Ardshinbank's purchase of HSBC Armenia in a short statement this week without elaborating. Neither Ardshinbank, Armenia's leading lender, nor HSBC, Europe's biggest bank, have disclosed the terms of the deal. It leaves Armenia without any commercial lenders controlled by major Western banking groups. Under Armenian law, the central bank must sign off on major changes of ownership in commercial banks, as does the Competition Protection Commission, a state-run anti-monopoly watchdog. The Competition Protection Commission approved the sale earlier in June. In a separate press release, Ardshinbank said it expects any outstanding issues to be resolved in the coming months, and hailed what it called a significant milestone toward going public overseas. The sale comes at a time of rapid change in Armenia's financial sector and record profitability for the country's banks. Russian citizens have moved at least $7.5 billion to Armenia since their country's full-scale invasion of Ukraine in February 2022, official figures show. Together, Armenia's banks have posted more than $1.2 billion in profit since the war began, according to the country's Union of Banks. HSBC first announced its intention to sell off its Armenian subsidiary in February as part of its effort to, in its words, redeploy capital from less strategic or low-connectivity businesses into higher growth opportunities. The Armenian government has again delayed plans to take partial ownership of the long-stalled Amulsar gold mine project. The arrangement was initially set to be finalized by March 22nd, but that was later pushed back to September 1st. It has now been delayed by another 2 months to November 1st. That's according to a copy of the agenda for Prime Minister Nikol Pashinyan's cabinet meeting this week, which was obtained and reviewed by our investigative reporting team. The agenda cites unspecified technical problems and a corporate restructuring at the mine's operator, Lydian Armenia. No other details were made immediately available. Lydian, which is ultimately owned by private equity firms in Canada and the United States, did not immediately comment. Lydian first broke ground at Amulsar in 2016, but development was suspended for several years starting in 2018, when activists and residents of nearby communities began staging blockades of the mine entrance, citing environmental concerns. Then last February, the Armenian government inked a surprise $250 million memorandum of understanding with Lydian and the Eurasian Development Bank to revive the project. As part of that deal, the EDB pledged to loan $100 million to Lydian, while Lydian agreed to hand over a 12.5% stake in the project to the Armenian government. But even after a year and a half, a formal timeline for the mine to begin production has still not been made public. Vahan Karopyan, who served as Armenia's economy minister when the deal to revive Amulsar was struck, said in January the government stands to make up to $104 million every year if the mine is finally put into operation. The government has formally concluded its internal process of dissolving the Armenian National Interests Fund, the scandal-ridden state-owned investment fund that collapsed earlier this year amid mounting allegations of mismanagement. That's also according to this week's cabinet meeting agenda, which provides previously unreported details on ANIF's final balance sheet. The document shows that over its 6-year existence, ANIF used nearly $19 million in taxpayer money for investments in projects that ultimately stalled or failed, namely the creation of a state-run airline and the construction of a massive solar power plant. By the end, ANIF's accounts receivable topped $22.5 million. Outstanding obligations total at least $3.1 million, including unpaid debts to creditors and unpaid salaries to employees. The government has now eaten those costs. In addition, ANIF owned some 1,350 acres of land in Armenia's western Aragat-Sotan region, plus fixed assets worth nearly $56,000. Those assets have now been handed over to the State Property Management Committee, a body within the Infrastructure Ministry. Reports of mismanagement at ANIF began spreading publicly in January. Pressure on officials to take action escalated sharply in March when it was revealed that Fly Arna, Armenia's national airline and ANIF's flagship co-investment with the Emirati low-cost carrier Air Arabia, had come to the brink of financial collapse. By May, Pashinyan's cabinet had moved to begin dissolving the investment fund entirely. That in turn derailed a massive joint venture with Masdar, the Emirati state-owned renewable energy company, to build Armenia's largest solar power plant, which never got off the ground. Officials have since indicated that the government is now scrambling to salvage that deal, but have warned Masdar is now demanding unspecified changes to the terms of the agreement. S&P has affirmed Armenia's BB-/B long and short-term foreign and local currency sovereign credit ratings with a stable outlook, citing the country's strong economic growth prospects and moderate general government debt levels. At the same time, the global ratings agency flagged that Armenia's weak yet gradually improving institutional framework, moderate per capita income levels, balance of payments and fiscal vulnerabilities, and exposure to geopolitical risks continue to constrain Armenia's creditworthiness. That's all according to a press release late last week from S&P, which forecast forecast Armenia's economy to grow by 6.2% this year and to expand at an annual rate of approximately 5% through 2027. By comparison, Armenia's gross domestic product increased by 8.3% last year and 12.6% the year prior, largely on the back of massive inflows of labor and capital from Russia and soaring trade. S&P's decision to keep its ratings for Armenia steady comes just weeks after Fitch, another one of the big three credit rating agencies, did the same. Both S&P's and Fitch's ratings for Armenia are considered speculative grade, also commonly known as junk, and indicate an elevated vulnerability to default risk. And, as always, please follow CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.